today, here's what you need to know. Nvidia tumbles into correction territory, wiping out $430 billion in market cap, the biggest three-day value loss for any company in history. Emmanuel Macron warns extreme political parties could spark civil war, while the national rallies Jordan Bardella touts fiscal discipline as the French election nears. Plus, Airbus scales back its outlook for the year, saying persistent supply chain issues are delaying production.
A quick check on the markets in the meantime. When you look at the futures picture, remember you're coming off of some weakness over in the States, so that's continuing into the early session. Eurostoxx 50 futures lower by 0.4%. FTSE 100 basically flat. Eurodollar 107.40 though. Martial strength there. We're keeping our eye on dollar yen. Now some people say it could weaken as much as 170. We're going to get the latest. Markets today starts right now.
Tuesday the 25th, good morning. Do you buy the dip in Nvidia? That is the question that everybody will be asking themselves this morning. Anna's already laid out the scale and breadth of the drop that we have seen in the stock over the last 3 days. It's not alone. Bitcoin's down pretty sharply as well. Do you buy the dip in that? But considering how narrow this market is, this is a wider question. This is not a single stock question. That is something the market's going to have to think about in its entirety. It will ripple across. So do you buy the dip after such a big drop? The next Fibonacci level, I'm told, is kind of 115, somewhere around there. You brave enough to get in at these levels? We'll get the early morning trade in about a couple of hours' time. But, yeah, I suspect a lot of people this morning are looking at their spreadsheets.
We're at 116.55 to put that level in context. It's interesting, though, because, you know, it's sort of moving quickly and slowly all at the same time. 3 days of losses, I suppose, adds some extra weight to it, doesn't it? Because if you just look at yesterday, down by 1.3% on Nvidia, the Nasdaq down by just over 1% as a whole, maybe would be to downplay the story slightly, but actually it's a bigger story because it's taken on a sort of multi-day dynamic.
Yeah, it's fascinating. I like to compare it to Apple in terms of that heavyweight that drives the market up, but then also brings the market tanking down. And every time, this is my favorite fun fact, every time Apple hit the $1 trillion, $2 trillion, $3 trillion mark, it led to a big sell-off in the S&P 500. And I think the same thing is happening with Nvidia. If Nvidia is the new Apple in terms of that mega weight kind of player, it's doing the same thing. And it just hit, I think, it hit that $1 trillion market cap as well. So it's only natural to let out some steam.
Everybody's trying to figure out why.
Yes.
And there's a bunch of reasons.
Five reasons.
Five reasons, apparently, as to why this stock is down.
Markets Live blog. I'm very grateful to Garfield for that.
But the fact that there are five tells you something, I think, that the market can't quite get its arms around understanding why this is happening, which makes me wonder if there was ever actually a reason for Nvidia to sell off, what it would really look like. If they missed at earnings, what would it look like?
Yeah, absolutely, because this is not about fundamentals. Of those 5 reasons, none of them are about... I mean, maybe there's something about pricing.
Insider selling,
right?
Maybe.
But nothing that says this thing happened and therefore we sold off. There's nothing very specific. There's triple witching. There's the fact that it overtook Apple and Microsoft, and maybe that caused a number of people to reassess. Is it really worth that? It's not as broad a stock. Insider selling, as Guy mentioned, technically overbought, a bit of a long squeeze, and maybe that relates to your retail point, Kriti, that if this is a new Apple, it certainly has the retail crowd hooked, doesn't it, in the way that Apple has or might have done in years past.
Yeah, it does. And to your point about the 5 reasons, so many of those are technicals. And I love when things go up by this much of a margin, they're bound to go down. It's just kind of the law of gravity there. And we've been talking about this a lot from a macro perspective. We've been waiting for a sell-off to happen. What is the catalyst? It could be as simple as, to your point, triple witching, but it's also rebalancing flows. It's the last week of not only the month, the quarter, but also the first half of the year as well. So it makes sense to pare things back a little before people on at least this side of the other go on holiday.
There's often a pre-shock to an earthquake. There's often a...
Is this the pre-shock?
Well, precisely. Is there a wider message that investors need to think about in terms of their diversification of their portfolios? How concentrated the risk is around Nvidia and some of these other tech stocks? What is the broader message here? Is the market just serving up a well-timed warning, or is there something else bigger going on here? And it feels like it's more of the former than the latter.
It's interesting that this, as you say, is coming up to quarter end, coming up to half-year end, and a number of people pointing out totally different dynamics happening through the Asia session. So we're up in Asia, and they're talking about rotation out of tech into other things. But that's what's interesting about Nvidia. You know, if you're selling Nvidia, are you selling it because you want out of tech, or are you selling it to make way and you want make way for other things? Or is it possible to sort of broaden the rally from tech into other things without selling out of Nvidia and the like? You know, it'd be interesting to see how that plays out.
I'm sticking with my this is a things go up so things go down. Traders trade because they trade.
I think there probably is some truth to that, but my point really is, if it was something more significant, what would it look like? Let's talk about other potential bounces. I was talking to Laurent this morning as I walked in. We talk about France, and it's kind of his game at the moment and what he's watching quite so carefully. He's one of our opinion writers, and he was like, yeah, just think about kind of, again, history. Think about what happened with Trump, the shock of Trump when he arrived. Think about Bardella arriving in Paris. He gets a government. He gets a majority. Do you get a Bardella bounce? Because the market actually looks at it and goes, yeah, this guy's got things to do, and he's trying to calm the markets down at the moment. He's trying to get everybody on board, and actually maybe he's more Maloney rather than kind of what everybody's freaking about in Paris right now. Do you get a Bardella bounce?
Yes, and if you do, is it because the agenda isn't as scary as you first thought it was, or you just think it'll take longer to deliver? Or does it reflect the fact that a lot of people voted for something, and therefore you get some kind of... I remember after the Brexit vote, that a lot of people who had not voted for Brexit couldn't understand why there was resilience in some parts of the UK economy, and then you remembered, well, 52% of people did vote for Brexit, and that was something of an explainer, plus the sort of long delivery timescale.
Well, it was the same story in the States, right? Everyone was expecting that in a Trump win, the markets would crash, and it did the exact opposite. I think the difference this time around might be, just to play devil's advocate here, is that there's actually no spending ability to do anything. So even if you do have, say, market-friendly reforms, there's no money to implement it, which, to Anna's point, might actually serve as it takes longer to actually deliver some of the things he's talking about.
He went on to say yesterday, we aim to bring the country back to budgetary reason. So, you know, even this is the national rally. They're talking about budgetary reason. So the message has got through. What that means in terms of policy is perhaps less certain. MEDEF, the business lobby, saying both the national rally and the new popular left would be dangerous for the French economy. That's their view.
Well, Macron's talking about civil war. So if you can avoid civil war, everything else sounds pretty good, doesn't it? So if the extreme is that, then everything else is probably looking fairly good. So maybe you do get a Bardella bounce on the back of that.
Yeah, that was some strong language. Is that a fair play or a fair reading of what's going on in France, though, right now? Or is it just more of a question, essentially, because if he's still going to be president, is it simply a question of the coalition? Like, how much of the narrative does this actually change?
Well, he says it's dangerous and it could spark civil war because it sets different parts of the country against each other. His rivals, of course, say, oh, no, it's Macron who actually divides the French. We'll see how that one plays out. It's interesting, I thought that the finance chief for the National Rally was saying, stop comparing us with Liz Truss. Bruno Le Maire likes to do that. I mean, the 49 days of Liz Truss is really living on in the popular economic psyche. It's quite incredible.
It is. Everybody's scared. Everybody understands the implications. Everybody's seen what can happen.
I also like the line from the finance chief for the National Rally saying that, but the ECB is more able than the Bank of England. And I mean, I'm not sure on what criteria he said that, but I thought this is praise for the ECB from the National Rally.
But that, I think, is where the real challenge lies. And I think there is a couple of things you need to think about in terms of the relationship to Liz Truss. The UK got rid of Liz Truss very quickly. If you had a problem with this new government, you would not be able to get rid of it very quickly. So the UK, in some ways, corrected itself very fast on the back of the error that was made, some would argue, around Liz Truss. You couldn't do that in France. You've also got a central bank that had the ability to manage things differently in a way that the ECB wouldn't be able to on a sort of national level. It is a pan-European organisation. Would it step in, and would the French be willing for the ECB to step in? I think there's some differences which are more negative for France than potentially for the UK.
But that's where the deficit story makes the monetary policy read-through so much more important, right, to your point. And I don't think there's often that clear of a read-through where monetary policy has to react to the fiscal that quickly. And I think it's also crucial that you mentioned that when it comes to the Liz Truss story, we're still waiting for that contagion effect. There's no contagion effect yet. When you look at the kind of what's going on in the French bond market versus the German bond market, these widening spreads, you're not seeing it show up in the gilt market. You're not seeing it show up in the U.S. Treasury market as well. Whereas the Liz Truss effect absolutely did. It was a global phenomenon that was reacting to what was happening in the UK. I'm still waiting for that to happen. Plus, I think Anna Boata yesterday on the show said, there still might be the risk of, yes, and once we get through this election, snap elections again in a year.
Right.
Yeah, should we talk about aeroplanes?
Yes.
Speaking of things that
I've
are
been waiting to talk about aeroplanes.
9 minutes in, Guy gets to talk about aeroplanes.
Go for it.
Let's talk about Airbus.
Yes.
So Airbus out with the warning last night. Bit of a surprise. It was an unscheduled call that Guillaume Faury ran, basically saying we are not going to be able to deliver as many aeroplanes as we thought this year. The reason for it is our supply chain is not able to keep pace with the ramp in production that we are particularly trying to deliver with the narrow-body aircraft, such as the one you can see on the screen at the moment, the 320 family. So that is where the challenge lies right now. The question is, how fixable is this? Where does the problem lie? And is there a sort of a bigger picture story that surrounds what is happening with the European industrial space? Well, let's try and answer some of those questions. Benedict Kamel joins us now from Berlin, leads our global aviation aerospace coverage. Benny, this was a surprise, right? So it was a surprise, but it's not a surprise. We've been hearing from this company. You spoke to Guillaume Faury in Berlin a couple of weeks ago. He was flagging it then. The supply chain has been under significant stress for quite some time. Is this just a reflection of the reality that we all knew, or is there something different in here?
Well, I think the answer to this is both. And as you say, a surprise but not a surprise. I mean, I remember you talking to Guillaume Faury at the end of the first quarter and asking him, why can't you get your supply chain in order? We're years out of the pandemic at this point. Every other industry seems to be doing just fine. What is it with planes that is making it so hard to get rid of this issue? And he said, well, it's a complicated industry. There are a lot of parts that go into this. Very skilled labour that we need. And what we heard yesterday is sort of more of the same but worse. So it's the breadth really of the issue that is now really spooking people. Engines are part of the problem now, and a more pronounced problem than might have been previously. He spent some time on the call talking about that specifically, but it's also aerostructures, it's parts for the interiors. It's really across the board that Airbus can't get the parts for its planes. And really, this is a supply issue. This is not a demand question. So normally a company cuts its outlook when the demand isn't there, when people aren't buying their products. This is almost like upside down. The demand is so strong that they can't build the planes fast enough and they don't have the supply to do so.
Really interesting, Benny. And I was reading the story that your team wrote this morning and just saying, well, thinking to myself as I was reading through, what is the real issue? And it was sort of issue after issue after issue. It comes, as you say, from many places. So Airbus could be weaker this morning. I noticed that Airbus suppliers could also be, could be a little weaker, or I imagine they could be as a result of this, at a time when Airbus is supposed to be doing really well as its main rival struggles.
Yeah, I mean, take a look across the board this morning. Have a look at companies like MTU, the German engine maker. Have a look at Safran. Have a look at some of the smaller suppliers like Thales. We saw yesterday in the US companies like RTX, GE. Sort of across the board, we're going to see this ripple effect because this is such an integral part of the global supply chain. All these parts that go into these aircraft, that's going to play a role. And as you say, this should be Airbus's moment. We know of the huge issues over at Boeing, and Airbus should be capitalizing on this to some degree at least and sort of building planes. But the problem is they just cannot get them out of the door fast enough. And what we saw yesterday, what we heard from the company, was really a fairly comprehensive revision to their outlook. We saw a cut in the number of planes they want to deliver this year. We saw a cut in the cash that they want to generate. We saw a cut in the operating profit. We saw a revision in the longer-term production target on the A320. So really, sort of kitchen sink is the word I think you're looking for. So a fairly comprehensive revision across the board.
Benny, has it been too aggressive when it comes to its ramp up, when it comes to just going so quickly to scale that this is kind of a limit that they've hit?
This is actually something that industry observers have wondered for a while. I mean, the outlook that they have for their monthly production rate, 75 A320 planes that they want to do on a monthly basis by 2027. That's now their new goal. It was previously 26. That's a lot of planes for something that is so complicated. If you ever get the chance to go into an Airbus production site, it is quite gobsmacking just how intricate and how complicated these planes are. Getting them right, getting them out of the door is really a feat. And, you know, doing 75 a month is a huge number. And there had been that question, as you said, like, are they stretching too thinly? They said that they can do it, but clearly now they're saying we can do it, but we can't do it in the time that we wanted to.
Benny, thanks very much. Bloomberg's Global Aviation editorial leader. Benedict Camel, thank you for joining us to take us through the latest on the Airbus story. Let's have a look at what else we're watching out for today. The US consumer will be front and centre. Tom was talking about this at the end of last hour. US consumer confidence data is due. We'll also see a US two-year auction taking place. We've talked about France already, and a number of news lines overnight from the various French candidates in those parliamentary elections. We'll get a debate taking place today, so we'll certainly be looking into that, the French election debate. Central bank speakers, there are a few of those. Nagel, Stranaris, then over in the US we have Cook and Bowman. So lots to talk about. Anything stand out to anybody as of interest?
The French
US
election
consumer
debate.
read, yes, all of it.
Yeah, I think all of that's quite interesting. US consumer confidence, are we starting to see the consumer cracking? There's evidence, and we've heard this from San Francisco. Daly's been talking about it. The labour market's beginning there's signs of a slowdown in the labour market. Does that start to show up in consumer confidence? But the consumer's also worried about inflation. But the French debate, can't wait. It's going to be fantastic.
For me, it's the two-year auction, actually. I'm curious about just how much demand there is in the front end of the curve, right? If you're waiting for the effect from Europe, et cetera, if you want to stick us in cash, if you're worried about the sell-off in the stock market, does that mean you literally buy the fresh money coming out of the Treasury? So I'm curious how well that's received, or how poorly, for that matter.
Be interesting. It's interesting to see people talking about what's happening in terms of the steepening finally happening in the curve. Anyway, we'll come back. We'll talk about that. We've got some great guests lined up to talk about what's happening in the fixed income space. We're going to check back in on the Airbus opening trade. This after we saw the manufacturer's guidance being cut. Clearly, the French story is front and centre. They're on the campaign trail. We're going to get to Paris next for the latest on that ahead of that debate. The story, though, that is dominating markets this morning, though, is the Nvidia stock drop. That continues. We saw it in the Nasdaq yesterday. We're going to talk about what's happening in these markets. Join the debate. What do you think? Do you buy the dip? Let us know. IB Plus, BBTV Go is the function. This is Bloomberg.
Welcome back to Markets Today. 40 minutes until the start of cash equities trading for this Tuesday morning. The futures picture for Europe looks negative, perhaps a little hangover from the Wall Street session of yesterday in particular. Tech names under pressure, Nvidia in particular under pressure. Let's start there with our conversation with Markets Live executive editor Mark Cardmore, who I'm pleased to say joins us on set here in London. Mark, very nice to see you here with us this morning. Let's start with Nvidia and this big sell-off, not just today, but over the last few days, and perhaps you touched on this yesterday a little bit, but a few days of sell-off in Nvidia, and yet the whole stock market didn't, you know, we're not talking, people aren't talking in panicked terms about a crash coming, and yet we've got this stock in correction territory that's been such a darling of the stock market. So what do you put that down to?
Yeah, we were just saying in the break, I think this is the most bullish possible Nvidia sell-off you can imagine. So there's three reasons behind that. I think there's technical reasons behind it, not just because it was overbought, but actually because the month-end rebalancing gives an extra reason for people to kind of reapportion stocks away from the kind of the real big winners to some other things that have been underperforming. So it's not technical reasons. It's not a fundamental change. It's not something we've changed the narrative on AR and Nvidia overnight. So I think that's really important. I think also the fact that the S&P 500 has shown unbothered, despite the fact that its darling has sold off, has been really, really important because it shows the kind of the stronger hands are so much on side here. They're not panicking, and it's really these kind of short-term momentum traders who are getting stopped out. They're not going to kind of control the broader narrative. And then finally, I walk in this morning and Asian stocks are higher, so it shows the broader world is kind of saying, yeah, this is a bit of a rebalancing period. It's a chance to take some money off, take some profit. And we've got to remember, most people here are on profit again, apart from those very short-term traders, take some profit on the winners and rebalance into those underperformers. It's actually a really bullish sell-off.
OK, it's a bullish sell-off. Let's go around the world a little bit. And I know that the French news flow is captivating our attention. We're working our way towards a debate on that front later on today. Is it obvious how you trade the French story right now? Are you watching the polls and trade and you know, is the conversation all about trading around the polls, or is it not like that? I mean, there's two rounds. That makes it complicated.
It's certainly not obvious to me. I've been struggling with this. I mean, one of the things is I do think that the Asia Open on Monday will be quite anticlimactic. Obviously, we've got real plans to kind of cover it very diligently and be very alert, but because there's those 2 rounds, because we've been so prepped for the idea that Macron's party is going to do so terribly, I think there's the only thing is a possible upside surprise. If there's a negative surprise, I think everyone doesn't know what to do for a bit. And you see a little bit of kind of low liquidity trading on Monday, and you probably see yields widen out if we get this kind of bad outcome. But I think people will wait to the second round. We probably sell off again into the second round, and that's where we make the conclusion is, do we suddenly panic about this, or are we genuinely mentally resolved to the fact that we're going to get maybe slightly more extreme policies in place in France than we have been planning before?
Okay, don't go anywhere, Mark, because we've got a chart, as usual. We're talking about Nvidia. We're talking about this bullish momentum. I want to show one more dynamic. We talk a lot about the 5 reasons that we might be seeing the sell-off in Nvidia shares. Some of that is largely technical, to be honest. There's also this fun little piece that hit the terminal about traders piling into a double-leveraged ETF a couple days before the sell-off. So a lot of momentum. And when I used to cover ETFs, and I think on Markets Live as well, the narrative is when the ETF crowd, when the passive crowd catches up, that's when everyone else, the smart money at least, sells off. In your kind of thought in terms of where the fund flows are actually coming from for Nvidia and where the sell-off is largely driven by, where's that coming from? And I'm going to add this in the context of the S&P 500 from its peak, by the way, only down 1%. This is not at least looking like the start of a massive sell-off. What do you think?
It's really not. So I think there's 2 dynamics here. I think the catalyst here might have been the triple witching last Friday, which has caused a little bit of noise. And then we kind of fed into rebalancing. And I think that will be more larger asset managers, longer-term asset managers, but they are literally tweaking at the margin. They're not doing any kind of mass selling. The problem is the combination of triple witching and rebalancing means that we've triggered outflows from short-term traders who have got caught in things like that ETF. And so I think that the money that's got cleaned out here is really the kind of last money to get into that trade. They are the weakest hands, and obviously that's problematic at the margin, but it's not the kind of reasons to start a much bigger sell-off in stocks.
What? This is a 30% sell-off over 3 days, okay? Biggest sell-off in history in terms of market cap. What happens on the day that Nvidia misses?
Then we've got really bad news. But remember, we've got no earnings for a while yet. So
no, I'm just flagging that in terms of what this is teaching us, what is the lesson we can draw from this in terms of the size and scale of the impact? Is it, to Anna's point, maybe actually the impact on the wider market, it's not that big. People are taking a few chips off the table, they're rotating into energy stocks, they're doing other things. Or is it 430 billion has been wiped off in terms of the market cap, and that's just the warm-up act?
I think it's the latter. I think we're at risk of taking the wrong lessons. I just said this is a very bullish sell-off. But I think if Nvidia sells off for fundamental reasons, that's a completely different scenario. And it doesn't even have to be as quick as this, but if it's suddenly undermining the whole AI bubble from the bottom up. So I think, we've talked before about how I do think, that the AI is a bubble, very early stages, not a bubble you fight. And I think from the macro perspective, as I said, it's still macro, super supportive environments. You're definitely not fighting it from the top-down level anytime soon. From the bottom up, you only start fighting it when Nvidia clearly misses. And I don't mean like a minor miss, given that expectations are all over the place. It's got to be like, oh, wow, this is and then that will be disastrous. And so that will be a real turning point. So you do not learn that every Nvidia sell-off can be ignored. If it sells off for fundamental reasons, this is bad.
Nvidia, to me, is the new Apple when it comes to kind of the heavyweight that is driving the entire market. But to what extent is it setting the tone for the way Amazon, Microsoft, Intel, AMD, et cetera, trade? Should it be leading the market, or is this just simply a question of waiting?
Yeah, actually, that's a really good question, because I guess Nvidia is just so concentrated on the most kind of bubblicious theme of the moment. Whereas, you take like Apple and Intel and Microsoft, and these are like pretty serious companies. I mean, look, I'm not a single stock person, as you know, but there's a great chart about a week or two ago, I think it was from Jim Reed from Deutsche Bank, kind of saying that, the biggest stock in the US stock market tends to underperform. Number 2 and 3 tend to survive. And it was just making the kind of, not kind of well thought through point, but the kind of offhand point. Look, Microsoft is a well-diversified business and can really survive. So you're right. So should Nvidia be driving everything so extremely? No, but is that going to change? Probably not while we're in tech.
Mark, thank you very much. Bloomberg Markets Live Executive Editor Mark Cudmore. Thank you for joining us. Thank you for getting bubblicious into your market commentary. Excellent. MLI Vigo is the function to use on the Bloomberg terminal if you want more from the Markets Live team. Coming up, Brexit, green energy and labour market reforms were all discussed in the Bloomberg TV business debate yesterday. More on that shortly. This is Bloomberg.
Tuesday the 25th. Good morning. Welcome back. We are watching the technology sector. We're 30 minutes away from the start of trading here in Europe. Are you going to see an Nvidia impact into Europe this morning is a question I think a lot of people are asking. What happens with Nvidia a little bit later, probably the bigger question. Keep an eye on Airbus as well this morning. That stock looks like it's going to be marked significantly lower. This as Guillaume Faury lowers guidance at the aerospace company. We'll see exactly what impact that has as well to the wider supply chain, Anna. The question stateside, though, is kind of this Nvidia story. Asia's not reacted that much to it. How much does Europe react to it?
Yeah, in fact, Asia, the story we're being told by those in the Asian market is that this is an opportunity to get out of tech and into other things. So Asia stocks gaining. MSCI Asia Pacific up by 0.8%. European stock futures are negative, as if that tech wobble is going to have some kind of impact here. I wonder how much is that? How much, Airbus suppliers could be in focus as well. I mean, they're not all in Europe, no doubt, but some of them are. But it's interesting, isn't it? We've talked a lot about Nvidia. The Nasdaq was down by 1% yesterday, but the S&P 500 only down by 0.3%, to the point we've been discussing for the last half hour. Yeah. How big is this sell-off in Nvidia, and what does it mean for wider markets? For Europe, at least, we are expecting to go a little bit weaker at the start of trade.
And that makes sense, right? You're going to likely see, I should say, the ASMLs, the SAPs, your tech trades of Europe kind of falter on that as well. To me, it's also, again, we keep using the word contagion in the geopolitical context, but we're going to be talking about it as well from a stock market perspective. If the idea is that Europe is the place to buy in the space of even these geopolitical tensions, so we talked a lot about this buy Europe narrative, is the catch-up trade kind of under assault a little bit, given, again, the geopolitical story. I think that's where we should go next as well and get a little bit of context and update on that as well. Emmanuel Macron has warned of the unrest, of France's extreme opposition parties could cause. The French president's comments came as the centrist party trails in the polls.
Ce choix, il s'est imposé.
This choice was imposed. Did it make me happy? The answer is no. On June 9th, if there was anyone it hurt, it was me. If we follow your reasoning to the end, the country explodes or there is civil war. Did we do everything right? No. After 7 years, don't people want to kick you in the butt? Yes.
7 long years of Macronism have weakened the country. The budget situation, at a near bankruptcy, as well as the security and migration disorders, are a call for unity. The National Rally today is the only movement capable of implementing the aspirations clearly expressed by the French people in a reasonable manner. In 3 words, we are ready.
En 3 mots, nous sommes prêts.
So some strong language there from Emmanuel Macron and Bardella as well. We talked about this in the context of potentially getting the Bardella bounce, as Guy put it. Joining us for more on the latest on France's elections and markets is Bloomberg's Paris Bureau Chief Alan Katz. Alan, give us a little bit of a lay of the land there. As we get this very strong commentary from both sides of the spectrum, how is this being perceived, especially in the context of France and potentially this Buy Europe narrative?
I mean, it's the polling has been relatively steady. And so what you have is you had some more extreme comments, or I guess changing comments as people sort of get ready for what the actual results of the vote will be. With President Macron's comments from last night, really were, again, him joining sort of in that sort of extreme discourse about what this election could mean. Finance Minister Bruno Le Maire has been doing that for 2 weeks now. And the response from Bardella and from Le Pen, particularly from Marine Le Pen this morning, and we have a story about that now, is that Macron's kind of comments show that he knows that he has, in her words, lost the vote to come. Now, what the actual results will be, it's going to take some time to play out. But it shows that people are trying to sort of prepare themselves for what's coming based on the polls. The RN, Bardella, they say we're ready to run the country. Please give us a majority in parliament. And Macron saying, like, wait a minute. I'm worried that they are in fact going to get a majority in parliament. And here's what I'm trying to scare you with, to prevent that from happening.
Yeah. And Alan, part of the argument, that we're ready from the National Rally is taking on the fiscal fears that some in the bond market might have, some in the wider financial community might have about what a party like National Rally would do on the fiscal side. We aim to bring the country back to budgetary reason, is the comment, and going so far as to setting out how it plans to pay for €7 billion of reduced sales tax on energy products. So we're getting into some of the detail, I suppose, that bond market investors have been looking for some time.
Well, the Bardella bounce that you mentioned has already happened, actually, or at least already started. So the sell-off in French assets was really in the first week after Emmanuel Macron called the snap election. And in fact, stock prices have come back a bit since then in France, and bond yields in France haven't actually risen. The spread between France and Germany widened, that's true, but that's largely because the German bond yield declined and the French one sort of stayed steady. And in fact, that spread, even though it hit sort of its widest level since 2012 at the end of last week, it actually narrowed a bit yesterday. And you're right, that they're really, the RN is really making a big effort to take that sort of fear out of financial markets and to really show that they are going to be fiscally responsible, to sort of show that they're going to be Giorgia Meloni-like in Italy, that they're going to be more reasonable than you might think, at least to sort of the business and the finance community. That's their pitch, and it appears to be having some impact.
Alan, during the Brexit votes, nobody in London could quite get their heads around why anybody would vote for Brexit, yet the rest of the country did. And I'm wondering whether Paris is what is going on in Paris versus the rest of the country, and whether the financial markets based in Paris have a really good handle on what is happening here. How much of a sort of information disconnect is there between Paris and the rest of the country?
So there's definitely some guy. I mean, it's whether it's London. I mean, you have the Brexit reference. I would have the Trump reference from 2016 in the United States, with a similar disconnect between sort of urban elites, not necessarily Paris or London, but just in general urban elites versus the rest of the country, no matter what country you happen to be in. But people, of course, have learned from both Brexit and from the US election in 2016. And so the information disconnect is perhaps not as great as one might think. The real issue, and I thought this was put well at a presentation at MEDEF, the France's Business Lobby Conference, the other day by a guy named Bruno Retailleau, who's a senator for what's called the Republicans in France, which is sort of a center-right party that's really largely disintegrated. It still exists, but it's quite small these days. But he made the point that if you have a broad centrist party, which is what Macron created, and the point of democratic governance is to be able to alternate administrations, then if you have that centrist movement in power, the only things that you can vote for are the extremes, whether left or right. And that's in part maybe what's happening in France, that people are interested in a change of administration, a change of government, and their only real choice is, if they don't want Macron and his government, is either the extreme right or the extreme left. And so I think that part might be part of what's playing into this.
Alan, thank you very much. Bloomberg's Paris Bureau Chief Alan Katz with the latest on the French politics. We look ahead to a debate, of course, between French politicians later on today. That'll be instructive, perhaps, around some of the detail. Let's turn to UK politics. With less than 2 weeks until Britain's general election, UK Business Secretary Kemi Badenoch and Shadow Business Secretary Jonathan Reynolds went head-to-head in a live televised debate. The pair discussed, here at the Bloomberg offices, the prospect of a London listing for Shear.
If they're doing business in the UK, we should ideally seek to regulate them from the UK, and the kind of expectations we would have, whether that is on labour market or regulatory compliance or tax, that is best done from them being based from the UK.
I haven't met Shane, and the listing is exciting a lot of people. But I, as business secretary, look after both large and small businesses. And there are two concerns that I would have with this listing. Doesn't mean that we don't want them, but they would need to show us how they're addressing them. The first is the £135 threshold. This is a very, very interesting business model that Shane has. It's sending products direct to the customer, no warehousing, which means that they're right under the customs duty threshold. That could mean quite a lot lost in terms of taxes. Of course, they would still be getting VAT. That is something that we would want to look at. The other thing we would want to look at is forced labour and what they're doing in Xinjiang. So those are actually quite critical things with this specific listing.
Okay, and will you put criteria around the listing, saying they have to comply with certain rules?
Well, the city is regulated, but we have regulators that do that. I'm talking specifically about this business and what we would want to see. We don't want a situation where the business secretary is intervening in every single listing. So we want a system that is well regulated. I think there's a lot more that we can do around the regulatory regime overall.
The UK Business Secretary Kemi Badenoch and Shadow Business Secretary Jonathan Reynolds speaking to me yesterday on that Bloomberg TV debate. It was interesting. We talked about Shein, we also talked about Thames Water, we took a number of individual corporate stories, talked about those. But more broadly, there was a lot of interest also in the Europe conversation, you know, whether, because Labour's obviously been pretty quiet on this, they talked about specific ambitions to renegotiate with Europe. And one of those was not ruling, in fact, Jonathan Reynolds going so far as to not rule out a role for the ECJ when it comes to certain policies, which is interesting in the context of the campaign, because they've been really careful not to upset Brexit voters, and that was, you know, a risk with that kind of commentary.
He didn't rule it in, he didn't rule it out. At the moment, they're just keeping everything as tight as they can. Precisely.
Yes.
The poker hand is as tight to their chest as it can possibly be. But there are some hints in there, aren't there? I think the biggest hint is the fact that they talk about the fact that they need to grow the economy. What happens if they can't grow the economy within the first 18 months? What happens if they can't grow it in the first couple of years? The easiest lever to pull at that point is the customs union.
It's some kind of deal with Europe, you know, if that is going to be in any way available. We'll see. It was interesting. We asked about the growth story, Kriti, and we were, you know, particularly pressing Jonathan Reynolds on the assumptions that go into their planning, as much as it is. The IFS critical of both of them for not giving us much fiscal detail to go on. But saying, to Guy's point, you know, what happens if you can't get growth? You need to get a lot of growth within a year. You're asking a lot of the planning system, if that's the case, to deliver on these plans if you're not going to have to go back to the bond markets quickly or raise taxes.
Yeah, I thought it was interesting that and bringing it back to the customs union as well, as Jonathan Reynolds specifically said that they're aware that friendlier relationship with Europe would ease the pressures on not only businesses but on the consumer as well in the UK. And I think that the flip side of that on the conservative side was in the space of not being able to negotiate something with Europe or the United States for that matter. I think they said that no one is doing, or the U.S. isn't doing any agreements with anyone at that point. They're trying to negotiate specific agreements with various states within the United States, which I thought was interesting. They're talking about, I think she cited Texas and Florida as two examples from that. And Jonathan Reynolds responding to that and saying, well, we're still going to try, but without trying to really explain what that means.
I thought it was interesting as well. I tried to, you know, get something out of Kemi Badenoch as to her personal ambitions, because for the global audience, a lot of people, you know, the focus might, if the Conservative Party does as badly as the polls suggest, that won't be the focus who leads the Conservative Party after the vote. But it could be Kemi Badenoch in the seat.
There may be some very senior figures who don't retain their seats, particularly in the south of England. So we will see which ones of those are left standing, and maybe we go from there. There's an interesting piece out that's worth reading on the Bloomberg Terminal this morning, talking about the fact that you want to look at the long end of the gilt curve, because that's maybe where the risk is on the supply side, as the government has to borrow more.
Yeah, the Pictet view, I think.
Precisely.
Yeah. That's going to be an area
that is
of
where you could see some weakness in gilts. But I think you've got to offset that with the potential risk elsewhere in Europe, and whether or not gilts become a safe haven in this space as well, which may give the Labour government actually a little bit more fiscal wiggle room in terms of their ability to borrow more to initially fund the growth push or the spending push that they want to deliver.
Shall we talk Greens?
Well, we can talk. Let's talk about the Greens. So you were doing kind of amazing things upstairs. I was talking to the Green Party downstairs, and I joke in a little way, in as much as this is not a national party in the UK. They're trying to compete for 4 seats. They may win those 4 seats. Now, you were upstairs asking the question, kind of, what is the message to business? And I asked that quite same question to Adrian Ramsey, the co-leader of the Greens. This is what he had to say.
The cost of not acting on the climate crisis is much bigger than the cost of acting. But in terms of business opportunities, and I work in the renewable energy sector for homes and buildings, but you could equally say the same about electric vehicles, about public transport, about farmers producing more food within the UK so we're more resilient. In all those sectors, if we give those industries the confidence to invest, to grow, to have a clear direction from government, then the opportunities in that green transition for jobs and for business and for reducing the root causes of the cost of living crisis, they're enormous opportunities. People do want to protect their green spaces, whether that's in our towns and cities or in the countryside. And the homes that are being built at the moment aren't actually meeting people's need. It's often luxury executive homes that are built without people getting the investment they need into local infrastructure and local services to go alongside those homes. So we need to be building communities, not just building houses. And then in terms of the investment that's needed in the transition to a green economy, the capital investment in things like public transport, insulating our homes, renewable energy, we would be willing to do some borrowing for that. As we're on course for a Labour government with a big majority, having a group of Greens there will be able to push them to be bolder, both on climate action and on the funding to restore our public services.
The co-leader of the Green Party here in the UK, what I think is interesting is that the Green Party on the continent in the EU elections did much worse than anticipated. And there is clearly a message coming from the voter, which is we've got other priorities right now.
Yes.
We're dealing with the cost of living crisis. We're dealing with the Ukraine. There's all kinds of other things going on. So we're deprioritising maybe some of what he's talking about.
Yeah, you wonder to what extent the Greens across Europe are a victim of that and shifting perceptions about war on the continent, as you rightly point out, because the Greens before that done pretty well. I'm thinking of in Germany and getting a seat at the table.
Part of the government, yeah.
Exactly. But I think it's interesting, and Kriti, as Guy says, upstairs, I was asking the Labour and Conservative Party about whether energy transition is an opportunity or is it a cost. And you won't be surprised to hear that the Labour Party said that it's an opportunity and the Conservatives says it's an opportunity and it's also a cost.
Yeah.
To sort of walk that line. And they have the Greens sort of siding with Labour in that sense and declaring it to be a big investment opportunity. And you could hear echoes of the Biden administration and their view on green in that, perhaps.
Yeah, you absolutely could. I thought it was interesting with the energy transition story. Hasn't this been a big, I think, a pillar, at least from the financial perspective, that Rishi Sunak and his government has pulled back on so many of this EV rollout that it feels like the UK was really hand in hand with Biden on for so long. And that was really reflected in the markets as well with the EV story.
Yeah, indeed. I mean, we did talk about that a little bit, and Kevin Bade not pushing back on that characterisation, but that is absolutely widely seen as the characterisation. Coming up, we will get the stocks to watch at the open, including Airbus, after the company cut its guidance and delivery targets on supply chain issues. Details next. This is Bloomberg.
Let's call it 15 minutes past the hour. We're 10 minutes away from the start of equity trading here in Europe. Keep a firm eye on what is happening with Airbus this morning. It and its supply chain could very much be in focus. The ADRs overnight were down quite sharply, but there will be other stocks that will be in focus this morning. Safran on the engine side, MTU on the engine side. There's plenty of other companies that are going to be impacted by this story as well. The read across, obviously from Nvidia, will be there. We'll watch for that, but Asia's not seeing it to the same degree. The other thing we should probably mention is we have seen a little bit on Apple that we need to probably focus on. Kriti's very keen to talk about this, so I think this is the story. This is the moment to talk about Apple.
You know, I think my parents would have been very proud if I was a lawyer one day instead of a journalist, and yet this is my very quick spiel on this is that competition concerns are really rising out of Europe. They're rising in the States. There was some concern about Apple being the laggard in AI, and now getting a double whammy basically from the EU, and we have yet to see if that shows up in some of the stock, but it might, and it might set the precedent for big tech on not only both sides of the Atlantic, but globally.
Another story for big tech to think about maybe this morning in terms of...
But how do you price it?
How do you deal with that? The other one I want to flag as well this morning is what is happening with Novo. It's going to invest $4.1 billion, another US plant basically being built. There's concern in the States about the cost of the drugs that it produces in these plants. Not only the obesity drugs, but actually some of the diabetes drugs as well. Let's get more on this. Naomi Kresge joins us now, senior healthcare reporter joining us out of Berlin. Naomi, how quickly can this come online? How big an impact will this plant have?
So this is a really big factory. It's going to double Novo's capacity in the U.S. And you know that it'll be doing the last stage of drug production, kind of getting the drug into the pens so it can be sent out to consumers. It won't come online for another couple of years. It'll be finished sort of gradually over the course of a couple of years, starting in 2027. And it takes some time to get a factory like this up and running.
Yeah, and this is the ongoing problem that they face. Supply chain capacity issues seem to be one of the themes that's running through our narrative this morning. Naomi, thank you very much indeed. Naomi Kresge, our senior healthcare reporter, joining us out of Berlin. Supply chains needing to ramp up production. That sounds like a familiar theme, doesn't it, this morning when we think about what's happening with Airbus. So let's talk about what is happening with that stock, its supply chain. Joe Easton joining us from our equities team.
So it does look like it's going to be a rough morning today for Airbus over in Paris. It is that theme that you've been discussing there. It's supply chains again. Airbus downgrading its guidance for production and earnings for the year ahead. A lot of that a hangover, it seems, from the pandemic, with them not being able to get hold of parts for engines and even cabin parts, that kind of thing as well. Now here we've got the old rivalry with Boeing on the screen. We can actually see that Airbus has been the outperformer because Boeing's the one that so far has had the worst supply and production issues, also the safety concerns as well. But we would expect to see some of that outperformance potentially easing today. Deutsche Bank just now downgrading the stock from buy to hold, describing this as a damaging update for the company and predicting earnings will be cut by 20%. Meanwhile, we're also going to look at Merck, this one over in Germany, of course, the company announcing some very weak trial data for a key cancer drug. This was a neck cancer drug that was expected to earn the company as much as 1.3 billion euros in sales at the peak. However, it didn't prolong survival in patients, according to the update. Now, analysts over at Citi saying that this was potentially going to be worth about 4% of their valuation, but given the surprise element, the stock drop is going to be worse than that, and we were seeing declines of around 8% on the Tradegate exchange this morning for Merck. Here we've got the analyst ratings on the screen. As we can see, very much a consensus buy, lots of bulls on that one, but analysts turning more negative given that update today. Quickly, we're going to flip over and look at Ocado, a brutal price target downgrade from Morgan Stanley today, becoming the biggest bear on the street. This is after a warehouse with the Canadian retailer Sobeys was cancelled last week. Also some issues around their deals with Kroger's as well. Now, the price target suggests this stock could fall another 31%. It's already down 59% this year, so really Morgan Stanley seeing a lot of downside in this company. The warehouse business, actually the weaker part of the operation, not the retail. Keep an eye on that one.
Joe, thanks so much. Our equities reporter Joe Easton with the latest on those individual stock moves. We expect a bit of weakness at the start of European trade this morning. This is Bloomberg.
Welcome back to Markets Today. Just a few minutes to go until the start of cash equity trading across Europe. You are seeing futures a little bit of a pullback, indicated lower here. Eurostoxx 50 futures down 0.6%, but the FTSE 100 only down 0.1%. Some might call it cautiously outperforming what you're seeing on Europe. A couple of individual stock stories to watch. We know there's a rebalancing story going on, a catch-up trade, perhaps what we saw in the overnight session in the U.S. as well. The Nvidia, I don't want to call it a correction, I'm going to call it a retracement, a little bit of a pullback that's going to have a read-through. But then there's some individual stories as well. We were talking about it all morning. Novo Nordisk, Airbus, I'm blanking on the name, the read-through from till I said from Nvidia, ASML, SAP, etc. So I would call it a sum of all parts kind of trade. What do you guys think?
Merck's going to be in the list as well.
Merck,
Joe was bringing that one to us a little bit earlier on. So yeah, there's some single stock stories, but I think the Airbus story is an industrial story, an industry story, it's an industrial industry story. Two for the price of one.
Important.
And I'm just wondering how far the ripples go.
Yes, because all those suppliers, wherever they are, you know, how much did this go down? Or how much did we already know this about some of the suppliers and maybe we weren't joining the dots with Airbus, I wonder. But yeah, we could see weakness there. Interesting, if you look at the stock sector breakdown from yesterday and thinking about where we go on the Nvidia story, technology was the weakest performing sector by a long way yesterday. It was the only one in Europe in negative territory. So that's of interest, isn't it, when we think about how much we see negativity around the Nvidia story here in Europe today?
Yeah, which I think goes back to the point we were making with Mark Cudmore, right? And one, this is a rebalancing story. This is a liquidity story. The things that did well yesterday may not do well today, and it's kind of flipping around. It's also this geopolitical turmoil story that we continue to talk about, and the idea that if you don't know what the result is the immediate trade to just cash out. And perhaps there's a little bit of that caution entering the market as well as we, of course, open the markets across Europe, which marks, by the way, the open of the UK market, I should say, as well. The early indications, like I said, were lower when it comes to futures. But when you look at the market move this morning, you are seeing, just waiting for this to actually kind of a positive start, actually, at least for the FTSE 100. But barely any movement.
Very
there.
Marginal.
I'll take the green. I'll take a positivity
green.
Where I get it.
Yeah.
But again, very, very small.
Could take a while for the CAC to open this morning. I think Airbus could take a while to get going, so we'll watch out for that one. It's not just that, it's Safran as well, so we'll see what happens. That's what the sector story looks like, but I don't think that's reflective yet of the story that you are going to see more broadly. In terms of some of the gainers, energy stocks are up. So you saw that rotation in the States yesterday, people moving money out of the tech space, and the area that appeared to get bought first was energy, and actually the oil story is fairly stable as well in terms of the price gains that we've been seeing coming through as well. So that bounce is coming through clearly here in Europe.
Yes, and the oil story, even if we're flat at 85.93 in terms of the Brent price this morning, worth a mention. Geopolitics, it seems to be, in the background, pushing us a little bit higher on the oil price, whereas last week it seemed to be that sort of risk-on sentiment that was pushing oil prices higher. So, you know, different week, different dynamics, but both of them resulting in a higher oil price. Still waiting for that French market to open up. The German market down 1/10%, and that's along with the FTSE MIB actually down by 0.4%. That's where the focus is. The CAC still not open, and
Airbus
the
is halted.
FTSE just above the flat line. Airbus is halted. Okay.
And some of the other suppliers, then I imagine as well.
Yeah. So Dassault is down pretty sharply. It's down by 4.34%. Rolls, which doesn't actually supply the narrow body market, is down by 4%. Safran, which does, is down by 3.5%. Thales is also tracking a little bit lower. It's down by 2.31%. The supply chain that you would see, a lot of it sort of centred in France, is already being impacted by this, the aerospace sector more broadly.
Yeah, and to my point earlier, which was about technology stocks being weak, it's clear then that there was further weakness to price in, because that sector is once again the weakest performing sector across Europe. Technology down by 1.2%. Some of that'll be Nvidia, but some of that might be other things. ST Microelectronics is the vertical. We're down by 6.7% this morning.
Don't get me started on Apple. You'll unleash my many thoughts on that. This is going to be a story that we're going to dive into later. But we're also waiting, I should say, for the read-through from the bond market as well, right? When you look at the stock market and what's going on with the geopolitical turmoil specifically in this region, you see it more in the bond market than you do in the equity market, outside of, say, the French banks, for example. And I think that's where we want to go next as well. We were talking to David Zahn about this yesterday. Take a listen to what he had to say about that spread.
We're short France at the moment versus Germany, so we think it could easily go to 100 over. If we got wider than that, then I think that's when you start thinking about
what would get us
buying.
wider than that?
Well, I think that we have the left and the right both doing really well in the polls, as you pointed out.
Yep.
Left is has huge spending plans. The right has big spending plans, and we also have a deficit reduction plan from the EU saying, France, you need to get your budget deficit down. French bonds should be trading wider. They should probably be trading more flat to Spain, and they're really looking at how they trade versus Germany.
All right, David's on there, the head of European fixed income over at Franklin Templeton, and speaking to this very program. And this is a really important thing as well, as we keep an eye on what's going on in France and then what's going on in the bond market, but also what's happening as well in the stock market as well. I want to get a quick check on the French index as well as it opens, and Airbus particularly.
It is down nearly 10%, over 10% now. So, actually not 10%. So Merck and Airbus are both down very sharply this morning. Airbus is down by 9.2%. Merck is down by something similar. Let's call it circa 9%. They're bouncing off the initial lows. But yeah, that's a chunk of change out of the CAC 40 this morning.
It's interesting, but still technology the worst. But actually, they're on a par, aren't they? Technology and industrial goods and services. So the latter is obviously the Airbus and supplies effect. Both of those down by over 1.5% this morning. So real weakness here in Europe.
Let's see if that reverses, though, in the next couple of days as well. So that's going to be curious. Let's bring it back to the bond conversation, if we can. Henrietta Peckmont joins us right here on set, head of global fixed income at Allspring Global Investments. Henrietta, a pleasure to have you on the program. The story this morning, and I want to say for the last couple of weeks, has been France. No surprise there. We heard from David Zahn briefly about that potential risk, that potential widening in the market. Where do you stand on it? Is this really more of a let's wait and see kind of moment, or is this really a tradable one?
I think it is going to be tradable because I do think we're going to get volatility over the next few months as we get the results. Really, a big surprise. I think the fact that he called these elections, and it's going to be really interesting to see how it plays out and what it means for France. I think probably our base case is that we get a form of hung parliament. So not much is going to happen, and we might have something that is pretty much three-way between the three main parties. But I do think there is the off chance that either probably the right gets more of a majority. I do think that they are going to behave. I think they've got 2027 in their sights, so it'll be really interesting to sort of see, what behaviour they exhibit months after the election.
How much of this really changes the narrative when it comes to the deficit, though? And we were talking about this in the context of the gilt market, for example, and the long end of the curve. How does the long end of the curve change for the French market, but also for the German market, in the context that we're talking about deficits and deficit issues and debt ceilings around the world on both sides of the Atlantic? How do you play it?
And I think that's very true. France is not the exception. I would say, though, it has worsened more than others. So I think that is the interesting aspect to watch. I think something to bear in mind as well is that call them the bond vigilantes, they've actually been playing their role. It's been really interesting to sort of see the effect that's had, be it in the UK. We've also had sort of episodes in Italy that I think are worth noting. When Meloni came initially, she tried to play her hand or tried to sort of put some of the policies that she had in mind in place, and she got put in check by the markets, be it on the equity side or the bond side. So I do think that politicians are aware of that, and I do think the markets have been pretty quick at reacting, and we saw that in the case of France and the spread there.
You're painting quite a positive picture in a way, in as much as you think that the market can control the politicians. And I'm looking at... Maybe. But you're pointing to Meloni. You're talking about the fact that also there's the aspect of 2027 and they want to do that. They're talking about the bond vigilantes having an effect. There is an effect, I guess. Okay, maybe I'm taking it too far, but there is an effect. Do you think the market also perceives the national rally as being preferable and more quantifiable than the left, and therefore a win for the national rally versus the left would be perceived as positive?
I think the markets are seeing the right as possibly more predictable.
Yep.
I think they feel that they have got a better chance in 2027 if they keep their nose clean between now and then. I think the far left is more unpredictable.
Yep.
I think there was a bit of surprise at how well Glucksmann did at the European elections, and also a bit of surprise at how fast the left was able to knit itself back together. I think it took the best part of 24 hours, which I think surprised commentators as well. So maybe a little more unpredictable on the left side. That being said, the sort of dominant party is the traditional left. So that could keep that side in check.
Do you think, therefore, we get a positive reaction to a Bardella win? Say he got a majority. Would that be perceived as being positive by the market, relative to where we are positioned now?
Now, I think one has to go back as well to the sort of setup of French politics, because you've got the president and then you've got the prime minister. So I think the sort of international standing will be on the president's side and will stay with Macron. And we'd have a form of cohabitation on the French side. But as a result, yes, you would have most likely Bardella as prime minister, and his role is going to be more on the economic front. So I do think that commentators are going to see that. So you might have a bit of a relief initially, but it depends how much he tries his hand afterwards. So I do think that one thing we're looking out for is for further volatility in terms of the spread now in the French context.
Henrietta, I wonder where you see the rise of the right going, from linking it to economics, though, very carefully here, because I wonder if you draw a line from the spike up in inflation that we saw in many different geographies and the rise of the right. Are they linked? And therefore, if you have expectations that we've peaked in inflation, that we're in a disinflationary environment, sure, it's a little stickier than we thought maybe 6 months ago, but things are heading in that downward direction. Maybe we'll leave it for the political commentators to say whether that means the politics changes. But is that your expectation, and do you see a link between the two?
I think the inflation picture is more of a global phenomenon, so I wouldn't necessarily put that on the rise of the right. I think the impact is going to be more on the growth prospects of France, and that I think we possibly have a bit more clarity there. If you look at what Macron's been trying to do over the last few years, is to favour growth and is to make France more of an investable country, and I think a lot of the reforms have gone in the right direction in that sense. I think there'll be a bit more questioning of the direction of France and how business-friendly it's going to be going forward. So I think the sort of casualty, if there is one, is going to be on the growth front more than on the inflation front.
That's interesting in the European context then, because you make the point in your notes that maybe the US growth exceptionalism is showing some chinks in the armour, but the European story is turning a little bit more positive at this point.
Exactly. I think we have seen sort of a few more green shoots on the European side. Well, PMIs last week being a bit of an exception there, so it's still fragile, but we have sort of seen more of a positive momentum there. It would be a shame to lose that, and I think this has the potential to sort of put a bit of a damper on growth prospects.
Is there when you look at the broader European, or even, dare I say the EM, but we'll keep it in the European kind of context as well, is there a hunt for yield at the moment where perhaps if you're looking at, say, 12% average gains in any stock market globally, or 5% on the Treasury, is there then more appetite to be invested in things like the Italian bonds or even the Spanish ones, for matter, the periphery, to get more of that yield?
I wouldn't say there's the same degree of yield hunting that we had when we were in a zero interest rate environment. So I don't think we're quite there. But there's certainly interest in having yield in the portfolio. And I think investors are looking at a broader set. Why? Because you've got a lot more opportunity on the fixed income front. So, yes, government bonds is a play again.
How much tolerance do you think there is in the gilt market for the UK government, let's assume it's a Labour one, to borrow more?
I think the UK really is in a tricky situation. They're going to have to be very thoughtful about how they fund their promises. The market is going to be watching the UK like a hawk. I think it is a slightly different environment, and I do think we're in a slightly different setup compared to the sort of exercise we went through towards the tail end of 2022. I think some of the sort of embedded leverage in some of the government positions isn't quite there in the same way.
I think it's an interesting question, though, because just days ago I read in other media a report saying, quoting lots of voices in the market saying, oh, if they borrowed to invest, the market will say that's discernibly different from just borrowing to fund everyday spending, and that might be okay. They might be able to do a little bit more. And then we have a story from Pictet saying, actually, that's where the market will be worrying, or at least the market will overall be worrying about gilts if there is more borrowing. Is it too early to say?
So I think it's too early to say. I think the technical picture in the gilt market is different to the trust event. So it'll be interesting to see how it plays out. But, I think the markets are out looking at deficits. They're looking at spending plans for sovereigns at this point.
Nice to see you. Thanks for stopping by to see us, Henrietta.
Pleasure.
Frankmore, Head of Global Fixed Income at Allspring Global Investments. Thank you very much indeed. Let's take a quick look at the Core 6, see what is happening around Europe this morning. We keep our firm eye on Airbus and on Merck this morning. Those seem to be the biggest casualties in the stock market. But as you can see, writ large across Europe, you are seeing quite significant weakness in a number of leading stocks. Novo Nordisk, though, investing in the United States, up by 0.2%, but everything else certainly seeing some softness this morning. Let's get some more details on some of the other individual movers. Joe Easton joins us for the details.
So it's a really rough morning for the aerospace sector today, guys. Lots of red across the screen. We're seeing Airbus now down 9% as they downgrade their earnings guidance and their production, potentially meaning 20% cuts to analyst estimates. And we're seeing a ripple effect across suppliers here. Safran, Thales in France, MTU Aeros in Germany, all hit lower. And we're actually going to flip over and do a second board. We don't normally see this kind of read across, but take a look. Another board here, Rolls-Royce, Melrose, Dassault Aviation and Leonardo in Italy. All of those stocks hit as a feed through from that shocking warning from Airbus. As I said earlier, Deutsche Bank saying that this is affecting the company's credibility, and it really is feeding through into the market this morning. We'll take a look at some other stocks that we had. The first one was going to be Merck. Now, we are seeing a deep decline in that one. The company halting this neck and head cancer drug trial, saying it doesn't prolong survival among patients that were in that trial. And that is a bit of a shock. It was expected to be a 1.4 billion euro drug for Merck. And as such, that stock coming down 9% now, the biggest drop in around 3 years for those shares today. We're going to flip and look at another one over in health. I believe it's going to be Eurofins Scientific. Now, you will remember that yesterday we did have a bit of a short report out of muddy waters on this one, questioning some of their accounting methods. But we have got a statement out of the firm today saying it does stand by their audits and stand by their financial documents as well. So we're seeing a bit of a gain in that one, pairing some of that decline. Did fall by around 15%, almost 25% at the low yesterday. In terms of your chips, I wanted to bring those up because a 7% drop for Nvidia yesterday, a 13% drop over 3 days. Not really a huge fundamental reason, perhaps just overbought, but we are seeing declines in ASML, BE Semi and the other chip makers like Infineon, ST Micro today. Really a feed through from Nvidia. We saw Broadcom, Qualcomm, all of the US peers down as well, so feeding through into the European market this morning. Then we'll take a look at a couple of others. We were going to do some morning calls in a moment. There we go. We've got Ocado. We mentioned that one. That was in Stocks to Watch earlier. Ocado has a biggest bear on the street. This is Morgan Stanley. Bear in mind, this stock's already down 60% heading into today's session. We're down another 4.6%. The analysts at MS have a 215 price target. See it trading at 298. Still lots of downside according to them. Finally, we'll end on some positivity. Not too much positivity today, but there is an upgrade in the UK insurance space, and that was the best performing stock at the open of trading this morning. Admiral upgraded at Berenberg. Berenberg says the company is gaining market share in the home and motor insurance space. They like that one. Recommend you buying shares of Admiral this morning, and that one is gaining 2.7% in London.
Joe, thank you. Joe Easton from our equities team with all of those stocks on the move. Plenty to choose from those affected by the Airbus story to the chip story. In terms of Airbus coming up, Airbus cuts guidance for the year as persistent supply chain issues worsen. We'll get more on that next. This is Bloomberg.
20 minutes into the session, Europe is down. The reason Europe's down is, well, a few things. A chip read across out of Nvidia. You've got a Merck story that is hitting the pharmaceutical space. And then you've got the Airbus space as well. When I talk about the Airbus space, I mean basically Airbus and its supply chain very much being impacted this morning by what we're seeing, which is why we are seeing actually some quite significant underperformance, not only for the CAC arm, but also for the DAX. So that's Merck and the Airbus story being affecting those two markets in particular. The FTSE 100 looks okay. I will take that.
The FTSE managing to skirt its way around those two curveballs.
Energy stocks.
And benefiting from a rise in energy stocks as well. Let's talk more about what's going on in the aviation sector then. Airbus shares deep in the red this morning as the aircraft manufacturer cuts its guidance and aircraft delivery goal for this year on supply chain snags. Let's get back to Bloomberg's global aviation editorial leader, Benny Camel, who's with us this morning from Berlin. Benedict, you went through with us last hour a few of the things that are weighing on this business. Were all of them a surprise, or is it just the sort of addition of one plus another plus another plus another that adds up to a bit of a shock for the market this morning?
Yeah, I think shock is the word that sort of sums it up nicely. There's a bit of a bloodbath on the stocks. We see Airbus down 9%, Safran, MTU, even Rolls-Royce in the UK. They're all down. And in some ways, a surprise, yes, given the breadth of the warning. They really revised most of their, if not all of their targets. But on the other hand, not a surprise, because this is something that Airbus has been talking about to various degrees for the last year at least. You know, I remember we talked to Airbus CEO Guillaume Faury at the start of the month, and he said that the supply chain issues would be with us for 2 to 3 years. But I guess they've gotten worse and worse, and that's sort of the tone that he struck last night on a quick call with reporters saying it's really everywhere you look. It's the engines that we're not getting. It's the aerostructures that are missing. It's the interiors of the cabin. So wherever you look, all these complex parts that go into a plane, we don't have them. As a result, we are at risk of building what they call gliders, so planes that are fully built, but they lack one crucial part, and that's the engines. And that's not a situation you want to be in.
Yeah, the joke is that you actually bolt an aeroplane onto an engine rather than the other way around because of the complexity of those pieces of kit. Let's extend the thought and think about what else this is going to affect. Who's not going to get their aeroplanes? How long does this last? How long does this mean that the airlines are going to be flying older aircraft for? What does this mean in terms of fares, Benny?
I mean, you and I were in Dubai at the IATA annual general meeting a couple of weeks ago, and one of the big takeaways from that was, where are my planes? You know, all of the airlines were complaining, we need to fly older kit longer, we have to refurbish older planes, and that's where it sort of becomes almost a circular problem. They have to refurbish these planes, the older ones. That means there's less kit out there for the new planes, and that's something that will probably remain with the industry for several years. It puts a whole list of issues on the table, not least, you know, sort of the comfort of the plane, but also sort of their aspirations in terms of sort of flying greener. They have the goal of being net zero by 2050, but you can only do that with newer planes. So there's a whole tail of issues attached to that. You know, we're now seeing 770 planes delivery goal for this year rather than 800. You might think that's not a big number, but remember, we're only at the halfway point of this year, so a lot can still go wrong, and the deliveries so far each month haven't been looking great. They should be ticking up. This should be the time when Airbus improves. Instead, they've been sort of level at best.
Benny, the sell-off today in Airbus and its suppliers reflects a more negative outlook now this morning than we had yesterday, so versus prior expectations. But were those expectations elevated too much then, perhaps by the business itself? Did it sort of get carried away with the sense that it was going to have a good year whilst its main rival was struggling on a number of fronts?
I mean, it was always a bit of a split-screen story this year, just given the level of issues at Boeing that was just so pronounced that the thinking was, you know, Boeing is in such a rut that whatever Airbus do, they can't do any wrong. And there was long a bit of a thinking, you know, is that production rate that they're targeting 75 A320s by 2026? That was the old target. Now they've pushed that out for a year. But was that target too ambitious? Can they really pull that off, given all the issues that exist in the supply chain? The answer now, as we hear from Airbus, is no, we can't do it in the time. We have to give it that extra year. But even so, some people are wondering, is that still too ambitious? You have some pretty negative comments out of the analyst community this morning. There's a Deutsche Bank note saying, you know, this is all pretty awful. The credibility of the company is on the line. So lots of questions to be answered there.
Let's turn our attention to Boeing and think about what is happening here. And in some ways, the Venn diagram overlaps with Airbus here too. We're waiting for news on how Spirit, the acquisition, the reacquisition, you could argue, by Boeing of Spirit, its big Tier 1 supplier, is going. This affects Airbus as well, because Spirit also supplies wings, etc., and other pieces of kit for Airbus too. How much of what we're seeing right now is Spirit-related? And once that issue, that split between Boeing and Airbus is resolved, how much of these issues go away or at least are more controllable?
Yeah, I think more controllable is what you're looking for charitably. This will take a while. I mean, Spirit is a hugely complex operation to pick apart. As we said, most of it will go to Boeing, a part of it will go to Airbus. That's what they're working on right now. We are hearing that they are sort of on the finishing line. There was a bit of a sort of last-minute snag over the financing that we heard. It looks like Boeing now wants to throw in some equity rather than cash. I mean, you've got to remember, this is a company that has, you know, dare I say, 99 problems, and so they need to fix that.
Yep.
We're going to get that in the next couple of days.
Benny Cowell, great stuff. As ever, fantastic coverage. Thank you very much indeed. Up next, we'll get back to the industrial story. Daniela Costa joining us from Goldman Sachs. This is Bloomberg.
Welcome back to the programme. This is Markets Today, 30 minutes into our European trading day, and it's a negative one for European stocks outside of London. The Stoxx 600 down by 0.4%. We see some real variation across the different geographies this morning. It's chips and it's healthcare stocks in the shape of Merck weighing on the DAX. The DAX is down by 1.2% this morning. The CAC 40 down by 0.7%. There's a bit of the chip story in there. There's also the aviation story in there as well. The FTSE 100 then benefiting a little from some gains around energy stocks, and we see that the FTSE is pretty flat, and that's about as much as we can hope for on the upside this morning. Let's get more into, Guy, the aviation story and its bigger picture, its read across.
So, yeah, technology's down as a sector, but industrial's hot on its heels this morning in terms of the impact we're seeing from that Airbus narrative that we got from Guillaume Faury, the CEO of Airbus, on a call last night, downgrading expectations for deliveries this year and pointing firmly at what is going on within the supply chain that it has, not only in Europe, but really around the world. Engines are a big part of that story, but engine manufacturers also have big supply chains. Anyway, this is a large component of the industrial sector, and we're seeing the impact this morning in that sector story, down by 1.6%. What lessons should we learn from this? Daniela Costa is the head of European Capital Goods Research at Goldman Sachs and joins us now. Danielle, I don't want you to talk specifically about Airbus or any of the supply chain stocks that we're kind of watching so carefully this morning. We've already talked about that. But as you look at what is happening here with this story that Airbus is giving us about European industrials and its supply chain, what lessons should investors in industrials take from this?
Hi, good morning. So supply chain has been a massive topic really since the pandemic. We've seen it with semiconductor shortages back in 21 and 22. We've seen it with container shortages around that time. I would say aerospace and defense remains the one pocket where we are still seeing it now. Obviously, the drops in activity during the pandemic were very significant. The restart of activity maybe took place in a more staggered manner than in other areas. It's also a quite consolidated industry in terms of its suppliers. So it is still seeing a bit more than other areas. I would say pretty much elsewhere in industrials, we have now seen a significant easing of the supply chain situation. But in this pocket remains a big topic. And I guess the learning for manufacturers really since 2020 and all the problems that have been ever since has been more towards localization, and that's a trend that we have continued to hear. So we're hearing more and more about capex in where closer to where demand is, rather than these long value chains.
But can European industrials deliver upon that? Airbus is flagging a number of things, one of which is labour. They continue to struggle with labour. They continue to struggle to get what they need. Can Europe ramp up its industrial base with the capacity constraints that exist more broadly in the labour market and elsewhere? We talk about wanting to reshore, but how possible is this? And is the industrial base in Europe being held back by sort of that side of the fence, i.e. the supply side of the fence, rather than the demand side of the fence at the moment? Because I look at the PMI data, which continues to be weak, and I'm wondering what the root cause of that is if we are trying to reshore, if we are trying to bring industry back into the European economy.
So I would say a few things in here. We actually, when you look across other areas, aerospace is in a quite specific place where demand is very strong. Backlogs go to 2030s for the big OEMs. The rest of industrial, the backlog situation has largely normalized. Capacity utilization in Europe across manufacturing is actually below the long-run average now. In the US, it remains above, and there are definitely very tight pockets of capex over there, of capacity utilization over there. In Europe, I think we have low demand, and we are not seeing a huge amount of capex on reshoring towards Europe. Globally, we are seeing a lot. It is basically the US and places like Mexico and India where we are seeing that activity. It is also very concentrated by industry. Aerospace is still a strong industry, as I mentioned. Utilities, power grids, data centers, semis. This is where we are seeing a huge amount of investment. The more general manufacturing, traditional capital goods areas, their capacity is actually low in Europe, and it's not very elevated at the moment globally. And inventories are actually quite high from all the restocking that you had when their supply chain problems were happening and manufacturers were worried to run out of stuff.
Daniela, good morning. Yeah, really interesting then, the extent to which aviation and defence is its own story, and that the hangover from the pandemic is perhaps greater there for the sector for the reasons that you point out. I want to turn to inventory levels and your research on that front, because there was talk all the way through the pandemic and post-pandemic that would we be moving from a just-in-time sort of assumption for many industrial businesses and other manufacturers to something that's more just in case. So basically carrying higher levels of inventory just in case you're going to need that. And I wonder where we are on that story, how normalised that picture looks.
Yeah, sure. I would say for most of the end markets that we track globally, this includes the 3 regions, we are still above the 5-year average on inventory, so the pre-pandemic levels. I would say a few exceptions to that are places like U.S. retail, U.S. chemicals, China's semiconductors, but pretty much elsewhere, we're somewhere between 10 to 30% above what we would think like historical normalized levels. Now, there's obviously a good question, as you mentioned, on whether people will go back to old levels given all the problems that they had in terms of supply chain. I think the jury is still out there, but the view is that for the activity that we have now, we are elevated for the most part.
OK, so we're elevated apart from the areas that you mentioned. Guy was talking there about reshoring, and there's a lot of talk in various Western markets about the extent to which production facilities are brought closer to home, friendshoring, even if not reshoring entirely. Daniela, within the space that you follow, the capital goods space, what are you seeing on that front? How much is that evidenced in the flows that you follow?
Yeah, absolutely. To give you an idea, sort of we track about 4,000 companies globally. Looking at sort of a capex tracker of all of their spending plans, we do see over 5.5% average growth in the next 3 years, which compares to the 20-year average of about half of that. So we do see very solid activity in terms of fixed capital investment being committed. This is very concentrated in a couple of areas. So it's the energy-related areas. Power grids is seeing double-digit growth. Utilities and renewables in general, semis, data centers, and that those areas really pull forward the overall numbers. We also see that manufacturing construction put in place in the U.S. in particularly has been a big driver of that. But in general, we do see quite solid levels on the capex side, and obviously we talked about before in terms of the more short cycle OPEX activity, the inventory levels are a headwind, but on the fixed investment, it's a positive picture.
Daniela, you talk about the energy sector and the investment that's going in there. Everybody's having to figure out the energy story. All industrials are having to figure out exactly what they're going to do with this. To what extent has the European industrial base adapted to higher energy costs? How much more of that maybe is still to come?
Yeah, sure. I would say so. We had a period in 22 when the gas spiked, and we saw very weak activity and shutdowns in things like chemicals that are very energy sensitive. We've also seen more of these announcements of capex towards the US, where structurally the energy price has been lower for longer. I think by now we're actually sort of on the other side, which is energy prices have actually fallen quite a lot. This is not so much of a major headwind that the companies are announcing at the moment. Still, yeah. I think we continue to see this capex elsewhere rather than in Europe, with the exception of really power grids and the defense segment, which are strong sectors where we're seeing investment in Europe. The rest is still going elsewhere due to the fear of that volatility, even though the headwind is not necessarily here anymore.
So there is an expectation maybe that it does come back. As you say, energy prices have come down. I'm hearing rumblings that next winter we could see energy prices picking back up again. This is a long-term structural story now, that there is a belief that energy prices in Europe will remain higher on average for longer.
Yeah, I think the geopolitical situation also leaves people worry with that. And obviously the potential upcoming discussions around energy policy, the implications that the European elections might have on that, leave people sort of on the fence of being comfortable to assume a low energy for longer, and the fear of volatility that is still definitely there on corporates.
Yeah, Daniela, you just referenced their political, a lot of voting taking place this year. And here in Europe, political change perhaps coming in a number of geographies. We're certainly watching the elections in France, in the UK, but elsewhere as well. What's at stake for the European capital goods space when it comes to the electoral events that we see this year?
Yeah, I mean, I think if you look at the last couple of years, the main policy actions that have helped drive this sector, and this sector has re-rated, the companies have seen better demand, is the capital goods sector in Europe is very heavy off electrical equipment companies, which are major beneficiaries towards the net zero policy, towards investments in utility grids, investments in the renovation wave for construction driven by electrical equipment. So a huge part, sort of roughly a third of the sector, is sensitive to the demand if we do see any sort of changes in terms of the approach to energy efficiency and to net zero. So that's something clearly key to watch.
Daniela, thank you very much. Daniela Costa, head of European Capital Goods Research at Goldman Sachs. Thank you very much for joining us to talk about that sector. Coming up on the programme, we've mentioned political change. President Macron warns over the plans being put forward by France's opposition parties. We'll get more on that story. That's next. This is Bloomberg.
So we would seek to raise taxes on those with the broadest shoulders to increase the funding on day-to-day spending. And then in terms of the investment that's needed in the transition to a green economy, the capital investment in things like public transport, insulating our homes, renewable energy, we would be willing to do some borrowing for that, because that's about borrowing for investing in the future. And the economic opportunities that come with that are huge for all of us, and actually the costs of not acting on the climate crisis are much bigger than the costs of acting.
The UK Green Party co-leader Adrian Ramsey speaking to Guy, in fact, ahead of the general election. And I was talking to the Tories and Labour yesterday, and we were having a conversation about whether the green transition is an opportunity, is it a cost, is it both? You know, all of those views were expressed on the stage yesterday.
Yeah, I think it can be both. It clearly is going to cost money, and it's interesting that we were talking to our last guest about, if you think about where the industrial story has been in Europe over the last few years, it's been in the grid, it's been in electrical components, it's been in figuring out a way to get power from over there to over there and then store it. All of those things are kind of where the industrial story is at the moment. If we see the politics slowing that down, what is the ripple effect? Or is that process just continue to unfold? The voting in the European elections seemed to suggest that the population is deprioritising it, but will industry deprioritise it?
Right, and sometimes what industry does, or even what happens on the ground in terms of energy diversification and transition is removed from the politics, as we see in Texas. You know, people often look at that as a really interesting example of where renewables have really taken off in conjunction with a Republican,
But that market's completely ring-fenced. It's not even associated with the rest of the grid, which is fascinating as well. What they're trying to build, therefore, is some sort of diversity into their system. And it was interesting, we were talking about the fact that Europe, there's this worry about volatility about the energy price, and maybe the energy transition solves that as well.
Yes, let's pivot our conversation. The Greens over in France, incidentally, part of that left coalition that we talk about fairly often. Elsewhere in European politics, though, it is the French far-right leader, Marine Le Pen, who's making headway against the government of Emmanuel Macron. She's been saying that the French president, Macron's accusations that the agendas of the far-right and far-left blocs could lead to, quote, civil war, indicate that he knows he's going to lose. That's her perspective. Joining us now with more, Celia Bellin, who is Paris head of the European Council on Foreign Relations. Celia, we covered a number of elements to the conversation as we approached our conversation with you. But let me go to the comments that we've had from Emmanuel Macron talking about the possibility of civil war. How do you view those comments from him, and how should those outside France look at that wording?
Well, for President Macron, at this point, there's only one choice, is to raise the stakes of this competition and try to scare back some of the voters away from the National Rally, from the far right, but also away from the new leftist coalition, the new Popular Front that just coalesced together last week. Because the reality, or 2 weeks ago, the reality is that Emmanuel Macron jumped into these snap elections with, the sense that he would probably be able to rally all those centrist forces around him. And a few days before the first round, it seems like it's not working very well for him.
Right, so and that's what we see in the polling, at least, isn't it, Celia? With the National Rally coming out top, the leftist coalition second, and Emmanuel Macron in third. When you look at that polling, what do you think that means for the French Parliament? Cohabitation is the word that many people are using, and what will that mean for France?
Well, you have to remember that those legislative elections are happening in 2 rounds. First round will be this Sunday, and it will already clarify who makes it to the second round. So polling is not everything. If you look at polling strictly, the National Rally is between 30 to 35% of the votes, way ahead of Emmanuel Macron, who polls at 20%. And then you have a sort of a leftist coalition that polls quite high at 28, 29%. But what happens is that between the first round and the second round, you will have to have some clarification on who's ready to unite against the far right. There is so much bad blood between the new left and the new leftist coalition and the Macron centrist camp that it's difficult to imagine that they will unite between first and second round. So the reality is that there's a high possibility of a hung parliament with 3 big forces, the far right probably dominating with maybe 200 seats, and then the rest of the 577 member of parliament being split between the remaining forces. But the other possibility is of a national rally that is so close to power, maybe close to the 280 that they need, that in the end they are able to govern, at least either alone or in a coalition with other right-wing forces.
Celia, good morning. It's Guy. Let's think about how that would work. What lessons do you think the National Rally is learning from Italy? What lessons do you think they are learning from Giorgia Meloni? They clearly have aspirations to the president's seat as well. 2027 is obviously a big date and not very far away. How do you think the far right would actually govern? How do you think the right would govern if there's some sort of a coalition with that aspiration for 2027?
So it's likely that the far right will be stuck between 2 aspirations, actually. One would be to mirror what they consider a model, which is Giorgia Meloni. It would mean a pragmatic approach to European affairs, one that is in the vein of what they've been doing in the past 2 years, which is present a reasonable front, respectful of institutions, very often, during that time, abstaining, refusing political fight. But this contradicts very much the fact that they would come in a victorious move. They would come in with electors determined to have them put in place their program. They have made many, many, many promises over the years. And a lot of them are on the fringe ideological far right. So if they put those in place, including at the European level, for example, getting out of the European energy market, for example, refusing any form of EU-wide cooperation on defense or on migration, then they will not be in the Giorgia Meloni pragmatic camp. They will be on the ideological, much closer to an Orban camp.
Let's say they manage to achieve some sort of a more Meloni-like outlook. How do you think that would affect the rest of Europe? At the moment, Giorgia Meloni is clearly being antagonised, you could argue, by other capitals and by those in Brussels. And we're going to see that maybe come to a head at this European leaders gathering that is going to be taking place later this week. If you have France and Italy leaning right, how does that change politics in Europe, and how does that get reflected in some of the key jobs that maybe are going to be divvied up between the main parties in Europe? How fractious do you think this could be, and what does it look like in terms of the outcome?
So for the moment, it's even if the National Rally makes it into government, it's going to be a 2-headed France, because the President Macron, will still be there. And as you know, President Macron has made Europe his signature policy, he will want to remain influential. So you actually run the risk of having an unreadable French policy, which makes the likelihood of having a sort of a strong French voice uniting with Meloni very low. And again, because of the ideological roots of the national rally, it is again quite difficult to imagine that they would follow the Meloni route. However, what we are seeing and experiencing all across Europe is this rise of nationalists, which either are coming into government or are rising in every single country. And this will have necessarily an impact on the next commission, maybe for making it, less influential, for potentially, reverting back on some of the biggest item and biggest ambitions, such as raising, a common budget, such as, structuring European defense. For all of these matters, the arrival of National Rally to power in France, it would have a high cost on these ambitions.
Really interesting, Celia. Thank you very much indeed. Celia Bellin, Paris, head of the European Council on Foreign Relations. Thank you very much indeed. Let's stay in France, or in Europe at least. Airbus is one of the big stories that we're watching in terms of the stock market story this morning. It is down. Its supply chain is down. The aerospace sector is down. Look at some of the numbers that we're posting here this morning. Airbus is down by over 9%, nearly 10% this morning. Airbus has been warning this supply chain story has been a risk for quite some time. It's come as clearly quite a big shock this morning to the market. It's interesting, the whole sector is being hit by this. Rolls-Royce does not make engines for the narrow-body market, yet it is being marked down, Anna, in quite a significant way.
Yeah, sort of a sell first, ask questions later mentality, perhaps, for the sector as a whole. Elsewhere, we see energy stocks gaining this morning, so the likes of OMV, Eni, Aker BP, a host of names going higher. That sector doing the best of all the sectors in Europe, and in fact, most stocks within that sector are higher. The oil price is pretty flat, down 0.1%, 85.93 on Brent. Seems to be geopolitics this week that's pushing the oil price higher, from Yemen to Russia. Whereas last week, it was a risk-on sentiment for assets broadly that was pushing things.
Let me link Nvidia to the sector you're talking about. There was it appeared yesterday there was a rotation out of tech into the energy names in the United States, and some of that may be being reflected first thing this morning. European chip stocks are under pressure. The Nvidia sell-off over the last 3 days has been significant. 430 billion wiped off its market cap. You are seeing an effect here this morning. So big names, and these are heavyweights. ASML is down pretty hard. BE's down. Infineon's another heavyweight. ST Micro. These are big names that are taking a hit this morning as we see that Nvidia read across into Europe being crystallised.
Yeah, let's go over to Merck. This is the biotech business, global pharmaceuticals and chemicals company, the German company called Merck, of course. They had some disappointing trial data. That stock is down by more than 10%. Weak trial data around a head and neck cancer drug Joe was talking to us about before. And from an investor perspective, there are a lot of buys. He was making this point as well. A lot of buys on this prior to the announcement this morning. And so perhaps that positioned us for some kind of sell-off, which we are then seeing.
What else we got later today? I think you want to watch consumer confidence data out of the States. They've got a 2-year auction as well. We've got a French election debate a little bit later on tonight. I am going to be watching that very carefully. See if I can understand some of it.
Yes, let's all try that. I think there's some football happening as well. Maybe. Less said about that, the better. We'll have a choice, won't we? French election debate or the football. What will we watch? That is it for markets today. The Pulse is up next. They'll continue to take you through what is a fairly busy day for European stocks. This is Bloomberg.